Let's talk about a company that is quite literally building the future of AI. But here's the thing, it's probably not who you think. It's not one of those flashy chip designers you're always seeing in the news. No, it's Applied Materials, the quiet giant whose technology is behind the scenes inside virtually every advanced chip on this planet.
So let's just dive right in. We all hear about the AI revolution, right? But it doesn't just magically appear. It's all built on silicon. And that leads you to the really important question. Who actually builds the incredibly complex atomic-scale tools that are needed to make those AI chips in the first place? And that, my friends, is where our story really begins.
The answer lies in a field called materials engineering. Now, the easiest way to think about it is like atomic-level architecture. It's the science of building a chip, layer by tiny, tiny layer. And this isn't just some abstract science. It's the absolute core of what Applied Materials, or AMAT, does.
Now, if you're looking at this from an investor's point of view, it's a classic story. If AI is the new gold rush, you don't necessarily bet on one single miner finding gold. You sell the picks and shovels to all of the miners. And here's the argument for why AMAT is that essential toolmaker.
And this really is the core investment thesis right here. AMAT isn't just a participant in the AI boom, it's the company that makes the boom possible. As AI demands crazier and more complex chip designs, we're talking about things like gate-all-around transistors and advanced packaging. It's AMAT's machines that turn those complicated blueprints into actual physical reality.
Okay, so that's a powerful position to be in, but how does that translate into a business? Let's pop the hood and break down AMAT's business engine, because it's actually a surprisingly resilient and clever model.
At first glance, this seems pretty straightforward. About 70% of their revenue comes from selling the big, expensive machines. That's the sexy part. But I want you to look closer at that other big piece of the pie, that 22% from global services. That part right there, that's the secret sauce to the company's incredible strength.
And this slide just illustrates that brilliant synergy perfectly. You've got the Semiconductor Systems Group, or SSG, which is the growth engine. It rides the big waves of customer investment in new AI tech. But then you have the Global Services Group, AGS, and that is the company's shock absorber. It services the massive global fleet of machines that are already installed, generating this stable, high-margin recurring revenue. You know, back in the 2019 industry downturn, equipment sales actually fell, but this services business, it hit record profits. What a powerful buffer.
So that business model creates a really powerful foundation. But how does AMAT defend it? Well, that brings us to its competitive fortress, or what investors like to call an economic moat. The first line of defense, it's just sheer scale. This number, $3.2 billion, that's not revenue. That's what AMAT spent on research and development in one single year. That kind of budget just lets them out-innovate and outspend their rivals. It creates a technology gap that's almost impossible for anyone else to close.
And all that R&D spending builds this fortress of intangible assets. Of course, you have the massive patent portfolio, but the real secret weapon, the real treasure here, is the data. Think about it. Because their equipment is in pretty much every chip factory in the world, AMAT sees everything. This creates this incredible feedback loop. More data leads to better machines, which get installed everywhere, which in turn generates even more data. It's a cycle that just feeds itself.
And all of this leads to what we call incredibly high switching costs. A customer like TSMC or Intel, they don't just, buy a machine. They spend years and literally billions of dollars co-developing a very precise manufacturing recipe on it. After all that, switching to a competitor, it's just unthinkable. The risk of delays could cost them billions. For all intents and purposes, they are locked in. Okay, so no investment case is ever complete without taking a hard look at the risks. To be credible here, we have to tackle the two biggest questions that are hanging over this entire industry: the classic boom and bust cycle, and of course, the immense geopolitical uncertainty around China. The semiconductor industry has always been, well, famously cyclical. It's a roller coaster. We've seen these massive investment waves driven first by PCs, then by smartphones, and each one was followed by a downturn. I mean, the 2019 memory chip slump is a perfect recent example of this classic boom and bust pattern.
And this brings us to the key debate that's happening right now. Is this current AI-driven investment wave different? See, unlike past cycles that were driven by millions of consumer devices, this one is driven by just a handful of hyperscale companies making these huge, strategic, multi-year investments in AI infrastructure. The argument is that this might actually dampen that old boom-bust pattern. But it's a huge question that every investor is trying to figure out.
The other major headwind is geopolitics, and that means China.
U.S. export controls now restrict the sale of the most advanced equipment to Chinese customers, and this has had a direct impact, shrinking AMAT's potential market in what used to be its biggest region for growth.
And honestly, it gets worse, because these controls have created some serious legal uncertainty. AMT itself has disclosed that it's received subpoenas from both the DOJ and the SEC regarding its China shipments. The outcome is a big unknown, and for investors, that creates a real cloud of legal and reputational risk.
So, with the business model, the moat, and the risks all on the table, let's get down to it. Let's get to the bottom line. How does all of this translate into actual results for shareholders?
The long-term picture here is just really impressive. Revenue has nearly tripled over the decade. But what's really critical for investors is that last column, free cash flow. It has grown even faster, from under $1 billion to nearly $7.5 billion. And look, even in that 2019 downturn, this thing was still a cash-generating machine. So what does AMAT do with all that cash? Well, this figure is kind of staggering. Over the past decade, the company has returned nearly 90% of it directly to its shareholders. That shows an incredibly disciplined focus on shareholder returns.
And they do it in two ways. First, a consistently growing dividend, which they have now increased for 8 straight years. And second, and maybe more significantly, they do it through massive share buyback programs. With nearly $16 billion still authorized for repurchases, management is sending a really strong signal that they believe their own stock is a good investment.
So how does the stock's price actually stack up against its rivals? Well, if you look at the price-to-earnings ratio, AMAT trades at a pretty clear discount to the monopolies in this space, like ASML and KLA. Its valuation is much closer to its direct competitor Lam Research. So for any investor, that relative value context is really key.
And all of this brings us to the final, crucial question. While AMAT might look reasonably valued against some of its peers, it's trading at a premium compared to its own historical valuation. So the decision for an investor really boils down to this. Do you believe that the structural changes being driven by this AI supercycle are powerful enough to justify paying that higher price for this critical enabler of the future? That is the billion-dollar question.